When might you decide to actually borrow from something that's going to cost 4.5% instead of borrowing from something that costs 4%? Let's get into it. What up, everybody? JDew and Jonah of the Banking Bros here at the Cash Compound, talking through control. That's what our episode is about today. And we have a scenario from one of our clients, one of the people we mentor in the program of Infinite Banking, Cracking the Code to Cash Flow, who has a very great question that we wanted to ask you the answer to today. Can you tell us? We'll give you some scenarios here, but Jonah, tell us about this guy and this situation and kind of where we came up with this idea. Control, why is that important?
Sure. So like many of you know, we mentor folks. Part of our business model is not just helping you get started, but actually helping you after you've gotten started to use and implement infinite banking in your lifestyle. And so this gentleman basically posed a question to us because he's going, I've got stuff on the horizon. I know it's coming, but which kind of direction would I go? And so there's actually a couple different scenarios that he kind of posed at us about, should I do this or should I do that or should I do this? And we wanted to walk through those kind of basically, as we've said before, just want to walk through them slowly, one by one, so that way we can make sure that you guys are on the same wavelength with the decision-making process that we might encourage him to do and that we do ourselves. And if you're in the similar boat, we'd encourage you to do. So that's what the agenda is for today. We're going to walk through his question and answer it best we can based on the information that we have and knowing a little bit about his infinite banking policies.
Remember, everybody, that if you want your specific questions answered, you can just get on our free consultation link. We have got a whole set of people all across the U.S. and even across the world from time to time who ask us questions just like this. And our service to help you is custom and complimentary. It's not generic answers when you have an actual policy. So once people start with us or they want to get started with us, we're actually answering their questions.
That's right.
Specifically. So we're sharing a few with you in this great new series. If you are not looking at us, then you should consider going over to YouTube, where we also partner this with another great series Jonah is doing, and we actually just break it down. But we're now partnering with that and cross-promoting on our platform. So you can see people's numbers. You can hear Jonah talk about, hey, this dude called me, and I really like this, and I think it's going to be helpful for a lot of people. So I don't think a lot of people know yet that these kind of like talk to each other.
Well, hopefully they'll figure that out as we keep moving.
All
so
right.
We'll link the video that came out on Tuesday of this week above us if you want to watch that one.
Or below or beside, depending on where you're looking.
Just depending on where you're looking, right?
Right.
Okay, cool. Let's jump into it, shall we? You've got it up, so why don't you read?
I will. I'm going to read the front half of this, I guess. Jonah, that's you, not me. Good afternoon. I have a question regarding when to use a business line of credit versus my IBC policies. IBC, of course, means infinite banking concept policy. So this person's in business, and a lot of you might be in business, and this is something you've utilized before, business lines of credit.
Right. So he's got two options: business line of credit, infinite banking policy.
So let me give you the deets, everybody. I have $240,000 business line of credit from a small local bank and about $120,000 cash value between my two policies. So this person has more than one policy.
That's right.
Started a whole system of policies. So he also thinks that he'll go up to about $150,000 from 120 to 150,000 by his next premium due in October. I have some investment properties and I need to stabilize them this year, and approximately $150,000 in renovations are required to do so.
Okay, so let's summarize. He's saying business line of credit, it's got $240,000 in it. Two infinite banking policies, got $150,000 in it by October. And he's saying I need to spend $150,000 to stabilize his renovations on his property. That's what he says, right?
Yep.
Investment properties, I need to stabilize this year. It's going to cost me $150 to do it. So $240 in business line of credit, $150 in policies, and he needs to spend $150.
Okay, so here it is. My original plan was to use the line of credit as a last resort since I would be subject to the bank's terms.
Okay.
Ooh.
So original plan was actually not to use the line of credit, just to save that. He says use it as a last resort. So original plan was to use infinite banking policy. Okay, keep going.
All right. The interest rate on that line of credit is 4%.
Okay. 240, 4%, and he didn't want to use it. Didn't want to be subject to the
didn't want to be
terms.
subject to the terms. Okay. So that's important. We'll come back to that, everybody. My consideration, though, is whether the bank will freeze the business line of credit due to the impending recession announcements. Okay. So we don't know. That's where control comes in, right? We don't know. And obviously, since you've gotten this, we have heard more and more from the Fed.
That's right.
On those interest rates and stuff like that. Okay. He gave us 3 scenarios. This guy was really thinking it through. First off,
Yep.
I don't think most people are this savvy when it comes to their own banking systems, but we're going to get you guys there. All right. The 3 scenarios I'm considering. I could, 1, use the business line of credit at 4% and my IBC policy as a reserve account. Got that, everyone? 2, use the business line of credit and then use my IBC policy to pay off the line of credit. Then use future rents to pay off the IBC policy loan. Okay, I'm liking these scenarios so far. Sound good. All right. And 3, use the IBC policy first and hold the business line of credit in reserves.
That's right.
Okay, so those are the 3 scenarios. Once again, use the business line of credit at 4%, use the IBC policy as the reserve account. 2, use the business line of credit and then use the IBC policy to pay off the line of credit. Use future rents to pay off the IBC policy loan. And 3, use the IBC policy first, hold the business line of credit in reserves.
Yep. So I think the biggest thing, we need to go back a little bit before we answer the question, tell him which option we would encourage him to do. We need to go back and talk about why he didn't want to use the business line of credit originally, right? Literally in the email, it says, my original plan was to use the business line as a last resort because I was going to be subject to the bank's terms. The interest rate over there is 4%. And he's nervous about next line, right? My consideration, though, is whether the bank's going to freeze the business line of credit due to the impending recession announcement. So there's kind of 2 things that are going on there. One is going, well, I don't want to have to. So I guess really what I want to ask the people at home and even ask you is, if you go use the bank, the financial institution, the third-party creditor, whatever, if you go use their money to do this deal, he needs $150,000. How much say do you have over repayment terms? How much say do you have over life getting crazy? COVID comes back, knock on wood. We don't actually want that one, right?
Right.
And then maybe you lose a job. Maybe people move out of your apartments. Maybe you're not collecting rent. How much say do you have over the repayment process there?
Right. So you actually probably, this guy seems like he has a lot of options normally compared to maybe you or I, because we don't have a bunch of collateral, right? He's borrowing against the lots of real estate that he has. But once the terms are on paper, no flex room, right? He might try to negotiate with his banker based on X, Y, or Z that he has. But of course, the bank has the ultimate say. They're loaning him their money to be able to do whatever he needs to do. So once it's on paper, by the time he leaves the establishment at that branch, game over.
Right.
He's on their dime and he's on their time.
That's right. And of course, what happens if you don't pay that stuff? They foreclose on your properties. They foreclose on your house. They change your line of credit limits. They move to, now you can't have one unless it's 10%, whatever.
That's right.
They can
do whatever.
Adjust
their money,
right? A lot of times those interest rates can move on you, or they can adjust them just depending on what happens. So this individual's kind of recognizing that.
Yeah.
And he's going, not interested in that stuff. Not interested in them having the power and the control to adjust things and change them. Just not interested, right?
Right.
But he's going, well, listen, I still have to spend $150,000. So help me understand how I should actually spend it. So let's break down like option number 1.
Okay.
So option number 1 says I can use the business line of credit at 4% and keep my $150,000 that I've got in my infinite banking policies just as a reserve.
Yep.
So if he did that option, it would be playing into the exact 2 or 3 things that he was scared and nervous about previously.
But obviously he's considering it because he wants to probably know if the math can math, right? He wants to know if this math will be mathing. He obviously knows that if they say 4% and they say these terms, I'm on their schedule at that point, and that's what I got to do. He knows that.
Right. So generally speaking, just based on his information, his email, his thought process, I would immediately kind of say, well, that first option is kind of the worst option.
And he knows that. He knows he has another option is the whole point.
Yeah.
Like that's the only option for people who don't have IBC policies.
That's right. So then let's look at option 2. He says, I could use the business line of credit.
Okay.
So he's going to spend $150,000 from his business line of credit. He had $240 in there, so that'll leave him with $90 left.
Yep.
If my math is correct. Okay. Then he says, I can use my IBC policy to pay off the business line of credit.
Yeah.
So then the business line of credit's back at $250.
Yep. 240.
240. Sorry,
Yep.
240. And your infinite banking policies, now you use the cash out of there, right?
Yeah.
Then he says, I'll use future rents to pay off the infinite banking policy loan.
So he's got some cash flowing properties and has renters in there. We'll have new renters once he fixes it up a little bit.
Yep.
And they can pay him back. Now, Jonah, remind us, what are those terms of paying back your IBC policy?
That's exactly where I was going to go.
If you pulled money from it to pay back your line of credit.
Exactly where I was going to go. So because the loan $150,000 is now in his infinite banking policy, which he owns and operates, he actually gets to set the repayment terms. He gets to set them. So what that means is if all of those adverse actions that we were talking about earlier happen, or any of them happen,
Any or all of them. Okay.
like people move out, they don't pay the rent, COVID comes back, right? Any of that stuff happens.
Wouldn't that be crazy? COVID comes back and nobody pays the rent.
It would be. That's
gosh.
what happened the first time,
Well,
right?
right. Nobody saw that coming.
Yeah, but if any of those things happen, there's not set in stone, you have to pay this back, no flexibility guidelines on these infinite banking policies. You're actually in charge of the repayment. So that means you can skip a month or 2.
Or 3 or 4, you get to pick how you're going to repay this back. Or even if you repay, we think you should, but I mean, you're the banker.
That's right. So he's got all the control in option 2. If he uses option 2, he's got all the control.
Here's another thought, Jonah. I have a question about this control. How much paperwork do you have to go through in scenario 1 using your line of credit at the bank, and how much paperwork do you go through using your policy for loans?
That's a good question. So in scenario 1, if he uses the line of credit from the bank to pay for the money, now again, he had to already go through the paperwork to have the line of credit, right?
Of course.
So more than likely, if you've ever done this before, applied for a loan, applied for a card, you're filling out lots of stuff. You're going to go through 2, 3, 4, 5 pages online, maybe 2, 3, 4, 5 pages inside the bank, right? You're going to wait for an approval. They're going to send you the money. They're also going to send you a nice big old packet in the mail with here's what happens if you don't pay, if you do pay, if you pay early, if you pay behind, if you pay late. Here's what we're charging you. Here's how that breaks. They send you like this whole thing, right?
It's a whole thing, right?
Absolutely. So that's what you have to go through to get the line of credit.
After your rectal exam.
Yeah, that's what you have to go through to get the line of credit. Now, of course, to the paperwork to maybe get a infinite banking policy, right?
Sure.
Well, first off, so you don't do our people even see paperwork? Just trying to think about it. I mean, so we send it to you so you can
virtual.
Prove it. Like you can make sure that we put all the your date of birth in there and spelled your grandma's name right to get the money afterward.
Right.
But you don't have to fill out a bunch of papers.
No.
And then of course, what you're getting in your email or to your mailbox is actually just the values of your policy, the guaranteed growth, which more than likely you're very excited to see, as opposed to like, oh gosh, here's
this is how your money will grow with us.
Yeah.
Rather than this is how you're borrowing against, your
But of
life
course,
savings.
if you go to actually get the money out of the policy, which I think is what you're asking, it's available online. No paperwork needed, man. You can just click through.
Well, if you wanted to get this amount, to be honest, a lot of times you do have to do a one-sheeter. So you can still fill it out online. Maybe there's the extra sheet you don't have to sign.
And then sign on.
Okay, so 2 sheets, you have to sign one of them, but that's it.
Yeah, you just have to sign it.
That's it.
Just so they know it's you.
The repayment terms are up to you. You're the banker. So there's nothing given to you on repayment.
That's right.
It's just fill out the paperwork, tell us how much you want.
That's it.
Okay.
So then there's option 3. He says, I want to use the infinite banking policy first, hold the business line of credit in reserves. Now, again, this is actually super similar to option 2. Option 2 says I use my business line of credit, I pay the business line of credit off, then I've used my infinite banking policy. Option 3 is I just use my infinite banking policy first. So either option, 2 or 3, are going to be the options that we would suggest to this gentleman. Option, of course, so basically what would be the difference between option 2 and option 3? Which one we suggest? And really what I tell him is, really you're only doing option 2 if you're that nervous about not using your business line of credit that they might take it from you, right? Because the whole point is to have the business line of credit as the reserve. So you don't want them to take it. And again, they're in control. They make the rules. They can adjust things. Right. So he might use it and pay it off just so they know it's used and they'll leave it alone for
That's
him,
another thing, right? Because if he uses it, they might enjoy that he uses it.
Exactly. But how crazy is that? That's the scenario that you're in. I don't want you to take it from me, so I'll use it and pay it off real quick just so you know it's around, right?
Yeah.
Whereas, of course, when we talk about these infinite banking policies, you don't have to do any of that stuff. It's not going anywhere. If you don't need to use it right now, then wait till you do need to use it, right?
Right.
Because it's just not going anywhere for you. But either option 2 or 3 being preferable, the one that you're going to use, meaning he's going to use $150,000 from his infinite banking policy. What that means is that he's taking a loan from that infinite banking policy to pay his $150,000 for all his repairs and renovations. His deposited dollars in that infinite banking policy are still there, still growing, still compounding. Then, of course, he'll use the rents accumulated from these places that he now owns or he's been owned to repay the infinite banking policy on his terms. That's the key word, on his terms, right? Right. And he can do that fast, slow, a little, a lot, small, big, whatever he wants to do because he's in control. So that's the answer.
There's our answers right there. So you still have control and deciding how you want to utilize this. This is a man of business here. So what he's deciding to do with it will need to be in his best interest. So he can use option 2 and or 3 depending on how he wants to grow his business, his real estate portfolio, and things like that. So both pools of money are available to him. One he controls, that's what this is about, and one he does not control. He can still utilize both if he likes to, but that's what this is all about. He is the banker and gets to decide how he's going to use. So at the top of this show, Jonah, I asked people specifically about the interest rate.
Okay.
But that turns out is not really what the question is. It's not the rate of interest, really, that's probably driving this system. It's how he wants to go about his business. He can have full control, or he can utilize and leverage someone else's money that he'll have to pay back. But he can actually stay in control the whole time if he wants to, based on what he has in his cash value accounts.
That's right. So if you're interested, another question that might have come up is, well, why in the world would he pay the loan back? Why in the world would he pay the loan back after he takes the $150 out of his infinite banking policy? If that's you and you're wondering that question, we've got a video on that, and I'll link it above or below or beside, however you see it. So that way you can watch why he'd pay back. Now, again, we're not going to dive into that in this particular episode, but that is important. You should know that you always want to pay back. That's how you get your policy to perform at a higher level. But I agree with you. A lot of times when people think about interest rate, they might just look at it for the flat number.
Yeah.
This one charging me 4, this one charging me 5, I choose 4. That's it, right? Mm-hmm. And not thinking about, well, if one charges you 4, but you're subject to their rules, regulations, and terms, one charges you 5, but you're not subject to any of that stuff, which one do you actually prefer?
And what's a crazy situation where this gentleman actually understood is I can actually use a combination of both depending on how I want to go about business.
That's right. And again, a lot of people might choose, well, I'm going to choose 4 because it's just lower. A lot of people might do that. A lot of people might choose the other side. I'm choosing 5 because I don't like banks like that, and I don't want to be subject to all that stuff. Or like you're saying, a combination of either or. But just understand that control is a factor. Right? We were all
a major factor.
We were all there 2 years ago when all of a sudden everything shut down. And if you weren't in control, there was for a lot of people, like no options here.
Yeah.
Right? Because you weren't in control. Yeah. And he sees that coming, which is why he asked about, hey, if life gets a little crazy, there's an impending recession.
Yeah. They change these interest rates on us.
Yeah,
then
they
what
change
happened?
the rules.
Yeah.
They
then
change
I
the
might
interest
be in
rates.
trouble, right? That's a lot of money to have out. And I don't know what his rents are going to be, but if he's renting a dozen different places at $1,000 a month, I mean, You need those people to pay those rents. You got some money to pay back to the bank if you use that line of credit.
That's right.
So hopefully you guys understood that. And those of you who are doing business and are savvy like that, you probably want someone to coach and mentor you through those questions for yourself as well. But moving on, we have got our quote of the week we're headed to right now. Mayer Rothschild, everybody. Everybody's heard about the Rothschild dynasty, the Rothschild kind of secret societies, the Rothschild empires. And Mayer Rothschild, who is really the father of the modern banking scenario all across the Western world, said this: "Give me control of a nation's money supply, and I care not who makes its laws." Controls right here. Now, this man, as far as I remember, is probably 17th century in Europe, and his sons went out and started banking dynasties that now, in theory, control so much of the world's money, and he understood that control was really where it was all about. Give me control of a nation's money supply, and I care not who makes its laws. You need to understand that if you have the power to control the money supply in your own life and finance whatever you want, you will be stronger than even the law, maybe. That's kind of weird to think about, and kind of like super power hungry of a quote.
Just a little bit.
But I mean, I felt like I could go there.
Let's give a shout out to Ernest Copeland. And Ernest, you are our fan follow of the week. Thanks so much for subscribing on YouTube, watching our TikTok videos, Instagram videos, Facebook posts, whatever it might be. If you've got a question about this video or any others that you've watched, put it in the comments. We'd love to answer it for you. We really appreciate you tagging along with us and watching some of our stuff.
Ladies and gentlemen, we'd love to talk to you very soon on a free consultation call about you getting started and having control of the money and compounding and financial freedom of your own life by starting your own infinite banking policy. We'll talk to you very soon.